The state of the housing market affects every investor, every homeowner, and prospective buyer out there. So early show financial contributor Vera Gibbons is here this morning to tell us which areas of the country are stabilizing and which one are not quite there yet. Good morning, Vera.
Good morning, Maggie.
So what are you hearing from the experts? Are we at the bottom yet?
Well, I'm sure you saw the foreclosure data that was out yesterday, up 24% in the first quarter. Unfortunately, more foreclosures in the pipeline, 3 million potentially this year. So that is going to continue to depress prices. Prices are already 30% off their peaks in 2006, could drop another 10%. But the good news that we're hearing is that there is a bit of a thawing going on in the housing industry. Some of these buyers are getting off the sidelines. We have all these government programs are working their way through the system. So the economists I talked to yesterday from moody'seconomy.com and Standard & Poor's say that a bottom is in fact nearing. We could potentially hit bottom sometime in late 2009.
And that's especially true in some cities. Let's bring out the map.
Especially true in some cities, right.
Let's
it's all
show
scattered throughout the different
where
areas.
the bleeding maybe is almost over.
If you look at these areas where you didn't have this huge run-up in prices, that's where we're either near a bottom, close to a bottom. So a lot of the Texas markets, for example, Dallas, Austin, Houston, these types of markets, because you didn't have this huge bubble that just burst to begin with. So that's one area. In the Northeast, looking at the Boston market, which fell relatively early, some signs of stability there coming back to the market. Yes, the financial sector has gotten hit very hard, but nowhere near the way it did in New York, for example. Pittsburgh, another area. And the thing that's interesting about Pittsburgh is that everyone thinks, oh, steel country, manufacturing city. But healthcare is the big booming industry there. If you look at the University of Pittsburgh, that healthcare, that medical center employs 40,000 people. So this is one area that is always on those lists of where the job growth is in 2009. So those are the ones that are near a bottom, at a bottom, close to a bottom.
All right, now let's give the bad news. If you live in these cities, you probably still have a long way to
go. Ways off in these
but it might be a good time to buy a house.
Exactly.
The prices keep going down. Let's look at it that way.
Exactly. Well, if you look at the California markets, I mean, those have been struggling. In San Francisco, for example, look at Phoenix. The median price of a home there is $125,000 right now. Las Vegas, of course, continuing to take hits. Miami, which was an area that totally overbuilt.
Yes,
your hometown. I mean, you know it well. So in these areas, people are actually jumping in and buying because prices are 40–50% off where they were just a year ago. All these foreclosed properties, unfortunately, the foreclosed properties are going to continue to drag down prices again for a while. The experts I talked to yesterday say it's probably a year or so off from these markets actually bottoming out. And then finally, if you look at New York, right there, and Charlotte, the banking hub. I mean, these are areas that are just now starting to see the effects of all the financial the losses in the financial sector. And unfortunately, if you look at a market like New York, 180,000 jobs expected to be lost yet again this year. So they're lagging behind other markets.
Not quite there, but slowly, confidence, at least in some places.
Exactly. Well, even so, we're not going to get back to these 2006 levels for another 10 years.
All right, Vera Gibbons, thank you.
Thanks, Maggie.